I have storage.
There, you got it.
Oh, just got a little note.
There you go. Welcome everybody to our first virtual Tara Lee Real Estate Group and Rich Lucas, a mortgage broker, live Q&A chat. Just so everybody knows a little bit about us, we're just letting one of our guests in, Janessa. We'll wait till she comes in. That might be easier. We're going to get to see her face, hopefully. There we go. So I'm a real estate agent. I started in the business in 1991. I've been licensed now for almost 20 years. When I first started in 1991, I actually started working for real estate agents, and I kind of was their admin person and developed a really amazing businesswoman career being an admin to different real estate agents and teams until I finally was able to free up enough time to get my license. So I want to introduce the members of my team. That's my son, Austin, if you want to kind of do a wave. We've got Lucy and we've got Bobby Joe. Everybody kind of wave. And if any of you know me, I'm always about just being super chill. But I do think there is a massive need, as we know, with all the interest rates, the hikes that we've seen. I'm seeing a lot of buyers very hesitant. So Rich, thank you so much for being part of our event. Why don't you tell the group a little bit about yourself and your experience?
Sure. I've been a mortgage broker for 20 years. Prior to that, I was a branch manager with the Bank of Nova Scotia, TD Canada Trust. And I'm going to show my age. National Trust, if anybody remembers National Trust. Yeah, the older people. So I've been in the business in total probably 34 years. Feel pretty comfortable, but I'll be honest, I've never seen where we are now before, where there's a bit of uncertainty. And let's be honest, we're kind of in uncharted territory because this was my first pandemic. And so a lot of things happened during the pandemic, supply lines, things like that affected the economy. A war in Ukraine, unfortunately, affects the economy. So we're just in a weird time right now. We're trying to get a handle on where we're going, right?
Right. Okay, so I think going forward, what I'd like to know from you is, for somebody that's been in the business so long, now all of a sudden you're seeing a distinct change for the first time in your career. And you and I both have been in this industry for so long. We've seen ups and downs. We've seen market crashes, and we've seen interest rates go quite high to very little. But what I noticed, Rich, was from when I first began my career, my first mortgage was 11.75%. And my parents at the time said to me, wow, you got a really good deal, because they were paying 17, right? Then all of a sudden, 3 years, we start seeing 2%, 2.5, 2.99. So with this sudden shift, let's be real right now. What is the rate as of today?
Right now, in terms of, we'll use a standard 5-year rate. You're looking at the low fives, anywhere like 5.19, 5.29, which means affordability is based on the stress test of 5.25 or your contract rate plus 2%, whichever is the highest of the two. So obviously 5.29 plus 2%, we're using 7.29 to qualify clients right now, which it's tough, right? It's obviously shrunk the pool of buyers. Hence, you're seeing prices come down a little bit, right? Yeah. Compared to what they were in the summer. But the summer, what we saw prices at in the summer wasn't really sustainable. We knew something was going to happen, right? We just weren't sure how aggressive they would do it. So they've basically bumped since I think we were doing high twos, low threes in terms of rates early summer. Now we're at 5.29. And we're expecting probably another increase from 0.5 to 0.75% either late in 2022 or early 2023. That should be the end of it for a bit. However, if the inflation rate does not come down low enough what the feds are targeting, to give you an example, our inflation rate right now in Canada is 6.9%. The target for the federal government is between 1 and 3%. Last year, this time, we're at 4.4. So again, it's unsustainable. Like, things were costing way too much. Basically, how you calculate that inflation rate is it costs you 6.9% more money to live, really, is what it comes down to, right? So how do we tackle inflation? We have one of two options. Either one, we increase taxes, which wouldn't go over well, or we increase rates. We want to slow down buyers, right? That's what they're trying to do, is slow down people purchasing things. But they got to be careful. You can't slow it down too much, or we run into a recession. And we have a recession, you got to bring rates down, right? To get people to buy. So we're kind of stuck in between right now. But most economists I've spoken to in the last week are probably looking like midsummer 2023 when you start to see things start to pick up again, right? I would say get used to the 4 or 5% rates, because that's what we're going to be stuck with for a while. Now, any client who's looking to buy something right now probably should look at like a 3-year rate. It gives them a little more flexibility, right? It's not too bad, 5.29. Again, like Tara, my first mortgage rate was 13.75 back in 1990. So, and that was the bank staff rate too. So we've come a long way from that. I don't think we'll ever get to that point again. But again, we're seeing rates that some people have never seen before, right? So it's tough out there right now.
Now, let me ask you, is it difficult? What are you finding when you're doing people's pre-approvals now? Stu and Nancy come in, they've got $50,000 saved. They both make $75,000 a year, 80. Are you seeing now with the hikes that we're seeing that you simply can't approve them, or you just can't approve them enough for this market that we're in, where you can't get anything under 550?
You're absolutely right. But what people are doing though is, hey, can you still protect my rate? Because I think prices are going to come down enough for me to be able to afford, right? So most lenders will offer a 4-month rate guarantee to make sure that your rate's protected. And again, just to clarify, let's say I have a pre-approval at 5.29, right? So they're going to calculate my affordability based on 7.29. So I've got that rate for 4 months. If rates go up between now and 4 months, let's say rates go up to 6%, where now they use 8% to calculate affordability, they'll still calculate affordability based on my original 4-month guarantee, right? So if we see a rate increase of 0.75 at the end of 2022, the banks will still allow me to use that lower threshold amount, right? Or the lower rate to be able to calculate affordability.
Yeah.
Okay. One thing too you should be aware of, people don't know this, that credit unions fall under provincial legislation. They don't fall under federal, which means they are not subject to the stress test, which means they'll calculate affordability based on the contract rate. Or what a lot of them will do is they'll use 1% added on, or they'll bump up their 5-year rate to 6%, but you're calculating affordability on 6%. So to say, oh my God, the stress test has stopped everything, not necessarily, because there's still lenders out there like credit unions. Yeah, the rate might be a little higher, but you're not calculating affordability based on 7.29, which just kills a lot of people, right? So,
right.
Does that make sense?
It makes a lot of sense. Thank you.
Yeah.
So,
I think what's happened, there's some unintended consequences with the stress test too. Imagine you have a mortgage coming due with Bank of Nova Scotia in a month, right? And if I want to transfer or look for a better rate elsewhere, I'm now subject to the stress test if I want to transfer my mortgage to another lender, which means I'm at the mercy of this existing lender, right? Because I may not be able to qualify based on 7.29, which means now they've opened a whole can of worms that oh my God, I'm stuck with this lender. Well, lender can offer me any rate they want because they know I'm stuck with them now, right? So there's some issues there the Fed's got to deal with too, right? So again, I spoke to a lot of people this week because this was our big conference for mortgage industry this week. So a lot of the banks were getting together thinking, okay, this is not sustainable, right? You're going to kill the economy. Plus, you're going to have a lot of people with mortgages coming due that were paying based on 2.5% 4 years ago, 5 years ago. Now the rate is 5.29.
Right.
How can we fix that, right?
Right.
So there are talks in place about maybe increasing amortization. So to say there's a light at the end of the tunnel for this whole thing, there may be, but we'll see what happens.
Right. So let me ask you, because we work with a lot of buyers, a lot of people in real estate, buyers and sellers. I know that I'm seeing a lot of sellers say because they have a variable rate with the hikes, they're now starting to feel a very tight pinch on their affordability. What is your suggestion for people and for us as realtors as well, when our clients are going, if they increase this anymore, I don't know that I can afford it.
Wow. Yeah, it's the reality that maybe they can't afford it or they have to make changes in their life to be able to afford it, right? And that's, you got to give the Fed some credit. That's why they calculated affordability based on 5.25 for the last 3 or 4 years to prepare people for this, right? So, in essence, it should be affordable for people because, again, they were approved at a much higher rate back 3, 4 years ago. So
Right.
it's a lot of it's a lifestyle change. You got to prepare for it, right? It's like anything.
Right. It's
To
very
say
true.
there's a magic bullet to say, hey, do this product because you'll save a lot of money. There's nothing really out there.
Right.
Whoa.
Yeah. Okay. So let me ask you this. What we noticed 2 years ago, when everything kind of went crazy in bidding wars, now all of a sudden we were seeing more and more appraisals, right?
Mhm.
So we're seeing, correct me if I'm wrong, I'm seeing with my clients, full disclosure, anybody that's been a buyer, one of my buyers over my seasoned career, old person career, I've been around for a long time. Rich has done a multiple of my people's and my own mortgage. So I'm seeing now appraisals actually seem to be the norm rather not the norm.
Absolutely.
I'm also seeing that people that have been pre-approved by somebody other than yourself, I'm only speaking because I know you educate your people when they come to you to pre-approve. Rich Lucas educates them on every aspect of what to expect, but not every mortgage person does. So they are unaware of what an appraisal even is. So can you talk to the group a little bit about appraisals, how often they're doing them, and what
Sure.
we need to be careful of?
If you ever have a client going firm who wants to go firm, you have to make sure you do your research on to make sure that that property, we can justify that sale price, right? Because, if we have one sale at 800,000, that doesn't necessarily make a market, right? They want to see multiple. So right now, especially with house prices being uncertain, what the banks are doing is basically saying, okay, to cover our butt, to cover everybody's butt, we'll send an appraiser out there to determine that value, right? So anyone who buys right now, they can probably expect an appraisal. It's unless they're putting a whole bunch of money down. But again, most people in the real world don't have a lot of money to put down on a property, right? So in essence, you want to make sure that your realtor has done their homework to make sure, again, that we can justify that value. The worst thing that can happen is someone goes firm, lender wants an appraiser out there, and they come in $50,000 less. Your client's got to come up with that $50,000, right? So I'm lucky. I didn't see a whole lot of properties come in way less because I deal with good agents like Tara who do their homework and make sure that they're paying a price that's not going to bite them in the butt later on, right?
Yeah.
Yeah.
And I think
Make sense?
threw a lot of people off was in the bidding wars, all of a sudden there was this crazy need for people to buy. And so many, what the public doesn't know is they see all these, oh, it sold for 200 over, 250 over, but the public does not know how many of those didn't actually close because it didn't appraise and the buyer didn't have the cash to come up with the difference. And I think the appraisal process is something that, everybody needs to be aware of. I want to take a minute and just remind everybody that's on board today that you should be able to, I'm not the biggest Zoom person, so it's not like I'm a Zoom connoisseur, like full disclosure, I sell real estate. So if you use the chat box to type in your questions for Rich, what I'll do is I'll read them. I've got my reading glasses on, everybody, and then Rich can answer them. So if you guys want to go forward, Austin, since you're my son, I'm going to put you in the hot seat. Do you want to just type in the chat box and make sure that I can see it? And we want to oh, still not there. So we want to welcome Janessa, Gloria, Mariah, Lucy, Bobby Joe. Rich, anything else you want to touch on?
When you get a pre-approval, it's not just about getting pre-approved. It's about a plan to move forward, right? How can we get to that point where we're able to buy a house down the road, right? So a pre-approval is a process. It's not just, oh, protect my rate, that's it. What we want to do is make sure that this person can buy down the road. And how do we get to that spot, right? So you want to make sure that there's a plan in place, right? Just because someone doesn't qualify today doesn't mean they're not going to qualify tomorrow, right? So you want to make sure you have a plan in place that, hey, a year from now, it could happen. Not everybody can buy a home, right? However, if you have a plan in place, things can happen, right? And I honestly think that in the new year, you may see some changes in terms of, okay, affordability. They may increase amortization to allow 40 years again. They may play with the stress test a little bit in terms of bringing it down because, the mortgage rates are never going to be at 7.29 for, in my eyes, ever again, unless something weird happens, right? But let's get the market going again. Yeah, they've accomplished everything they want with the stress test. It brought prices down. It has. Let's do something now. Because unfortunately, the people who got burned the most during this whole stress test thing were the first-time home buyers, right? Because that's who they penalized first. Anyone who bought CMHC, they suddenly used the stress test, not knowing that, the reason for this increase for people like in Toronto selling their home, and they pay anything out here, right? Because they've got $2 million in equity in Toronto, and now they can buy price was an object out here. Or a lot of immigration too, right? Where they brought a lot of money to Canada where they're paying cash, right? So I think that was more the cause of increased prices, not the typical first-time home buyer. And that's what we're really trying to push the government, that allow first-time home buyers to have maybe a 30-year am or a 40-year amortization, right? Get my drift? It's just they penalize the wrong people. Let them get in the game because we have a housing shortage right now.
Yeah.
We do.
Yeah. Is it difficult? Let me reword this. What is your recommendation for people when it comes to their credit and being able to qualify for a mortgage?
Check your credit regularly. People, everybody's had a dispute with Rogers or Bell in their life. Unfortunately, they report on your bureau now. So make sure you do a regular check on your credit bureau every 6 months. Make sure things aren't on there that shouldn't be on there because it happens. Or if you had any either previous issues that they've been cleaned up or fixed, right? You got to be proactive with your credit bureau because no one else will, right?
Right. So then I understand because you and I talk a lot about mortgages and you're always giving me great advice for all of my clients throughout the 20 years. Do you have a recommended Beacon score, or I guess they call it credit score now? That did age me, didn't it? That people should try to target in order to comfortably fit into a mortgage product?
680 or better opens up a lot of doors for you in terms of credit score. You know, lenders are still very credit score friendly. You know, you could have an amazing bureau, had one screw up with, you know, one collection. Oh my God, I didn't know about that. But the banks will still use that credit score to determine whether you'll get a mortgage or not. That's really the rule. So that's why look at your bureau every 6 months. Again, make sure there's nothing on there that you're not aware of, or you had a dispute with Rogers or Bell. They haven't slapped something on your bureau, right? So
I think back in the day, we started hearing a little bit more about private lenders, right?
yeah.
It was a box that people could fit into when they absolutely needed it. You and I have talked at great length about private lenders. Is it easy to get a mortgage with a private lender if you don't fit into a typical A or B lender?
Mortgage private lenders are more about their equity position. You know, they're more concerned with, okay, oh my God, if something goes wrong, are we able to get our money back? The problem with private mortgages right now, rates are ridiculously high. They are what they are. So you have to have an escape plan. Like, I will not put anybody in a private mortgage unless we have an escape plan a year from now, 2 years from now, right? Because you don't be stuck with paying this high rate forever. You'll never get anywhere. First of all, you never pay down your mortgage.
Right.
Secondly, at some point, the lender's going to want his money back, right? So, yeah, private lending suits certain people, but again, you have to have an escape plan to get out of it, right?
It has to make
I
sense.
see some. Are there some chat questions down there?
Yeah,
I see.
so Janessa's asked a really good question, and I'll get to yours too, Lucy.
Yeah, no
You
worries.
recommend to get a credit check every 6 months. I heard that requesting a credit check can actually impact your credit score in a negative way. Is that true?
How you would do your own credit check is you can get your own credit bureau from Equifax directly, which does not have any bearing on an inquiry on your bureau or not. And that's a bit of a myth. People think, oh my God, I had an inquiry on my credit bureau. It's going to affect my score. No, it's not. If you're getting 20 inquiries a year, yeah, that's going to affect your score, but you've probably got other issues, right? So an inquiry on your credit bureau does not affect. If you're doing a ton of them, that will, right? But a simple inquiry. But the best way to check your own credit is set yourself up with Equifax, pull a bureau every 6 months. Doesn't affect you at all.
Yeah. Yeah. I do that. And what they actually started doing was there was this box I clicked. I'm not a super IT person, but I clicked this box that said, do you want to keep updated from Equifax on your report? So at the end of every month, they actually email me an updated report.
Yeah.
So I'm not actually running my credit. It's actually them keeping me updated. So
Yeah.
Janessa, maybe
It's called a soft inquiry where it doesn't really affect your bureau whatsoever.
Yeah. And it's good to stay on top because listen, we're living in a society of a lot of fraud.
Yeah.
Right? So how many times have you seen you pull their credit back in the day? That's what you had to do with their permission, and people not even aware of what's been on their reports. Right?
Absolutely happens. Absolutely. Dispute with somebody. I'm not paying that. Forget that. And lo and behold, it's on your bureau, right?
Yeah.
And unfortunately, you can't change the past on credit bureaus. It's there. It's there. You know, as time goes on, it becomes less and less important. But when it's there, it's there. It's going to stay on there for a while, right?
Yeah.
So again, keep on top of your bureau. Go like Tara does. Go through Equifax directly.
Yep. It was super easy. Now, Lucy would just wanted to re-emphasize what you had mentioned before about when you get pre-approved and you can get that rate hold guarantee. Can you get it for 30 days up to, is it 120, or can you get a rate hold guarantee even longer?
The only time you'll get a longer rate hold is if you're buying new construction, where the banks will hold your rate for a year, 2 years. If it's a typical buying a home, generally the max you can get it done for is 120 days.
Okay.
Not all lenders do it, but it's good protection, right?
Yeah. Yeah. However, there is something that you had mentioned to me earlier when it was a mutual client that I had a buyer and Rich was helping me with the mortgage for them. If they have a rate hold guarantee for 120 days, it expires on 120. They actually have to buy and close within that period of time, especially if there's been another interest rate hike, right?
Correct.
Right. So when we're living in these times where we're seeing hike after hike after hike, if you have a rate hold guarantee, you really want to make sure you're actively out there, you're actively doing offers in order to secure a location where you might not qualify for the amount that you have if the interest rate's gone up. Am I correct?
Yeah. To give you an example, I'll give you an example. I've got clients that I did probably a month and a half ago at 4.59, just before we had latest increase. And they bought a home and it's closing on January 10th, which is like 8 days before their 120-day thing runs out. So yeah, but they get to keep the lower rate and the lower calculation of affordability. Remember, right? Because the stress test for that deal is 6.59 as opposed to 7.29 we're doing now. So in essence, doing a pre-approval protects your rate. It also protects your stress test rate.
Okay, perfect. Anybody else want to ask any questions for Rich? Feel free to log in, or maybe I'll start singing. Just kidding. Just kidding. What we're noticing is we're seeing a lot. Of course, we're getting close to Christmas, so things slow down for sure in the industry, but we are seeing listings hit on the market, which is really super awesome. And we're seeing houses stay on the market. It's really nice to not have to have buyers fight over a property anymore. Believe it or not, it was quite stressful on most of us as who had listings. But we're starting to see that they're really staying on the market for a longer period of time. A lot of people aren't even going in the door and looking at houses. Or when they are looking at houses, they're not even trying to negotiate an offer. What's your feedback, or do you have any feedback, Rich, from the people that you have pre-approved? Do you see that maybe they have a bit of a fear to pull the trigger?
It's like it's a big purchase, right? So it's such an emotional investment. It's the biggest purchase of your life. So obviously there is, but people are looking at it now going, hey, that house that sold for $1 million whatever months ago is now 800,000, 850,000. Suddenly that's kind of within my price range, right? So I'm seeing kind of it's just I don't know what to think of it right now. I really don't, because it's, again, I'm not really sure how this ends. I think you're going to see another increase. That's for sure. However, you're going to have people who have mortgages coming due that their payment's gone up $500, right? So what's going to happen there? The feds need to step in. You can't let all these mortgages go bad, right?
Yeah.
So they got to do something. And I think they really got to target the first-time home buyer, because they're not the ones who drive prices up. It's not them at all. They should do, and we've been fighting for that forever, is give the first-time home buyer a break, right? Let them go 30-year amortization. Let them not use the stress test, right? Because again, they're in that house. They got a contract for 5 years. So hopefully in 5 years, their income's gone up. So if rates go up, they're able to afford it, right? Mm-hmm. It's just they seem to penalize the wrong people when the stress test came out. Yeah, that was my own opinion.
Now, before the group came on board, you and I were chatting, and you're kind of starting to get a very mild feeling, that you may see the stress test now resolved and done away with. There's small talks through the grapevine. Am I right?
The UK changed theirs, right? And we're very similar to the UK in terms of, our conservative approach to banking. And the scuttlebutt I've been reading is at some point the Feds need to get together and talk about this, because again, you don't want to kill the market for a stress test, right? It's we're buying at 5.29 now, which was our stress test. So let them move on. We got to do something. I think you'll see something in the spring. I really do.
Yeah.
Because typically our spring market's the busiest time of year, right? So I think you'll see something done. Don't quote me on it, but I bet anybody a coffee it'll happen.
I'll take that coffee.
Yeah.
Okay, so
That's my guess.
what is your best advice for people when they want to get into, the home purchase and mortgages overall, to kind of wrap it up? What do you really want? Your message, what is it for the public who wants to start getting a mortgage?
Buying a house is more than just saving your money. It's a commitment, right? It's a commitment to save your money, to keep your credit, to, when I bought my first house, I delivered pizza. I worked at the bank during the day and delivered pizza at night because I really wanted a house. So you have to make inherited sacrifices in your life, right? You have to. So you got to, just keep saving your money. Again, I can't stress enough, make sure your credit is clean. All right. That's the most important thing. If I can give anything tonight, is make sure your credit's clean. And again, just do your own inquiry.
Okay, perfect. Does anybody else have, okay, we got one more. Yay. Okay, Lucy wants to know, do you recommend bank an A lender or an alternative lender?
Always an A lender if you qualify. Alternative lenders are, credit issues, income. And with A lenders, obviously you can buy with less than 5% down. Typically with B type lenders or alternative sources, you're looking at minimum 20% down. So yeah, alternative lending is great for some people, and the rates aren't really that much higher than what A rates are at. And they're a little more lax in terms of, how they calculate income, things like that. But knowing that you need to have a lot more down to be able to qualify for that. So generally the minimum amount is 20%. There is a market though. There is a huge market out there. Again, they've come a long way. Back when I first started in this business, there were one or two alternate lenders. Now there's like 50 of them. Like, it's incredible how many there are, and everybody offers something, right? So, and again, rates aren't that bad, and they'll allow you generally to amortize over 30 years. It's just the larger down payment is what they require.
Right. Okay. Well, just to introduce ourselves again, we want to thank everybody, unless you have any more questions, for coming on board. I think Rich and I have talked in great detail about continuing to provide this Q&A service to everybody, because we want to make sure that everybody understands what's really going on in order to be able to qualify for a mortgage, what it's really like to buy a house and sell a house. So I think we're going to do our next one probably in the next 2 to 3 months. Unless, Rich, something were to significantly change, then I think maybe we'll be bumping that up a little bit quicker. You're okay with that?
Yeah. And if anyone, reach out to Tara if anyone has any questions or things they're not sure of, or how do I deal with this? Reach out to me. Like, I got nothing else to do.
Yeah, well, at least we're not in
Yeah,
exactly. So for any of you that if you get listings from us, that you can email us, no problem. We definitely want to give everybody Rich's contact info. I can honestly speak from somebody that Rich has serviced hundreds of my clients throughout the last 20 years. He's also helped myself. He has the knowledge, and I want to make sure that his info is out there. Rich, do you want to tell them the company that you are a mortgage broker with?
I'm with a company called Entrust Financial, Entrust. We are we're only 3 of us, but we are one of the oldest brokerages in Ontario. We were born like in 1979. So yeah, we've got, between the 3 of us, we probably have over 100 years experience. So it's insane. So we've seen everything. So again, anything you come across, you're not sure about, just reach out to me.
Will do. So we'll make sure that everybody gets your contact info. You can also follow Rich. Do you have an Instagram, Rich?
I do not. I have Twitter. I'll send that to you.
Well, why don't you give a shout out to what your Twitter handle is?
Oh, I have to look. I have to look.
Oh my God, I'm dying right now. I'm
I'm
dying.
not techie guy.
Show our age. You certainly, if you're getting listings from us, you know how to reach us. If you're not, you can follow my group, which is myself, my son Austin, Lucy, and Bobby Joe. We're a real estate team. We all work together. You can follow us on Instagram at Tara Lee Real Estate. Also on Facebook at Tara Lee Real Estate. That's Lee with an L-E-A. And of course, Bobby Joe's got her own handle, so does Lucy, and so forth. So, Rich, do you know your Twitter yet?
Oh, I haven't looked.
Okay,
I'll send it to you. Okay?
All right, everybody. Cheers. I
Thank
hope you
you.
enjoyed it.
Have a
That
good
was
night.
fabulous.
Take care.
All right.
Good job. Thank
Bye,
you.
guys.
Bye.
Thank you,
Bye.
everyone, for
All
coming.
right. Thank you.
Bye.
Bye-bye.
Bye.